How's it going, everyone? My name is Jake with Trade Confident, and today I'm going to be talking to you about the FOMC meeting that just happened today, March 22nd. I'm just going to go over a few important points, and then I'm going to talk to you about the effects on the crypto market now and moving forward. To sum it up, we got a 25 basis point interest rate hike, making the total interest rates 4.75 to 5.0%. As of right now, the Federal Reserve is estimating about a 5.1% interest rate by the end of 2023. So we're actually really close. What this tells me is we're not likely to see another large interest rate hike through the rest of the year. Rather, if we do, it's going to be a very small one, even smaller than the 25 basis point interest rate hikes that we've seen consistently over the past couple of meetings. This also tells us that the Fed pivot is very close. And Fed Chair Jerome Powell did specifically say to not expect any interest rate cuts in 2023. We do know it's very likely we are going to pause our interest rate hikes. In the press conference following the FOMC meeting, Jerome Powell specifically stated that further interest rate hikes are very unlikely to affect banks at this point. And that was a lot of FUD that was going through the market. That's even something that I talked about. I personally thought that further interest rate hikes could affect banks even further, but it sounds like they plan to use every tool at their disposal to make sure no more bank runs happen. Jerome Powell also pointed out that despite spending a lot of money in order to bail out these banks, it is nothing compared to what COVID-era policy caused in terms of inflation. Most of the programs designed to help people through the pandemic have begun to roll off, meaning that spending that caused that massive inflation is no longer happening. And any spending required to bail out the banks, while it does sound like a lot, is nothing compared to what we had to spend to get through COVID. And because of this, bailing out the banks is unlikely to contribute to inflation even a little bit, if at all. From here, Jerome Powell also told us that the disinflation process is continuing. We are seeing lower and lower inflation numbers every single month, and this is really great to see. Because interest rates are really high, Jerome Powell is also expecting to see banks tighten their credit requirements, meaning it'll be harder and harder to borrow money, further helping to quell inflation. As of right now, economic indicators are feeling strong, with a tighter labor market and a stronger spending since the last report. Both of these metrics will need to weaken a little bit, especially the labor market metric, in order for inflation to be fought. Overall, it sounds like the Federal Reserve is just planning on staying the course, and it doesn't seem like they're going to deviate from their plan much further. They even changed their language from ongoing interest rate hikes to as needed interest rate hikes. And this in and of itself is kind of a Fed pivot as well. After the announcement, just about every single market saw a decrease, with the S&P 500, NASDAQ, and Dow Jones all falling, pulling the crypto market down with it. And with that, let's check out where Bitcoin is and where it's likely to head in the following days. Here we are looking at Bitcoin on the 4-hour time frame. You can see we got a perfect sell signal right here as the price absolutely tanked, pushing us back into, let me scroll out here, pushing us back into this broadening triangle pattern. This candle right here started within the broadening triangle pattern, and if it stays within at candle close, this will mean we have broken back in officially. Heading back to the daily time frame, as this is going to give us a little bit more accurate information. We're also seeing price versus one money flow high. Trend exhaustion topped out in the top red section and is moving farther down. As soon as whales decide to start pushing money out of the market, I think this is really going to crash further. We also got a sell signal a couple of days ago, and the price is seeing its moves back down as expected after the FOMC meeting. Whales have been buying the rumor, and it looks like they have just started selling the news. I think it'll take a little bit of time as whales continue. I mean, if we take a look right here from the sell signal up here all the way down to the strong buy, this was 18 days, nearly 3 weeks worth of time. So because of that, I think it will take a while before we see the very bottom of this move. I have been a little bit aggressive in my expectations, and I will be honest with you guys about that. I have been calling a move as far down, and I said this isn't quite entirely likely, but a move down to 18,400 is possible. I do want to let you know it will be difficult for that to happen, and I think it will take a lot of bearish catalysts to make that happen. But at the very least, over the next few days, I'm expecting a move down to $25,271 right here. And if we break that, the next move down that I'm expecting is somewhere around the $22,700 mark. And please remember, this is likely going to take quite a few days. We're on the daily time frame right now. And remember, this is like an 18-day span of time. This isn't going to happen overnight. And on the daily candle, again, we'll need to see a candle open and close below this broadening triangle pattern in order to see a true break back down. I told you earlier that all the markets are red except for Litecoin, apparently. Good for Litecoin. That's great to see. But overall, again, things are just feeling a little bit bearish for me. The reaction was honestly not as strong as I expected. I expected much bigger moves to happen. However, it looks like it's just going to take some time. Moves down after FOMC meetings are extremely commonplace. If we scroll out here, just about every single one, we can see move down, big move down, really big move down, move down, move down, small move down. This one actually saw a move up right here, move down, and at this point, we are just waiting to see what happens here. But overall, just based on historical data, I would expect to see moves back down still. Just to reiterate, whales have bought the rumor and they're likely to sell the news. This is very consistent over the past few months. So that is my outlook after this FOMC meeting. Based on what Jerome Powell has said, I'm shifting my personal sentiment a little bit to actually see possible higher highs. It is possible, although unlikely, to see $18,410. It's possible, unlikely. But I think higher lows could be in order, followed by higher highs. Overall, it looks like the Federal Reserve is even changing its sentiment, changing the language from ongoing rate hikes to as needed rate hikes, which feels to me like the Fed pivot towards the Fed pivot, you know? So market sentiment is changing. I'm very excited to see this. I think we're moving into a very exciting time for crypto, even if temporarily we do move back down. With that, if you want to get access to these indicators that have helped me call the crypto market, it helped me call this move down here, you can grab them at the links in the description. Just go ahead and scroll down, click show more, and it'll be the second link right here. Go ahead and click that. It'll bring you to our indicator page, and the best possible deal is actually to purchase the bundle pack first. This will include the trend exhaustion and price versus while money flow, as well as 7 other indicators for you to use, as well as a $400 off coupon for the TC top and bottom finder. Purchasing all 11 of Trade Confidence indicators using that $400 off coupon is actually cheaper than buying the TC top and bottom finder alone. So why not get 11 indicators for a better price? No matter what you get, it's lifetime access for a one-time payment, and you get full dedicated email support. Thanks so much for watching. With that, trade safe, trade confident, and I will see you in the next video.